Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that's very popular in the market that recently announced earnings for the fourth quarter and the full year of 2022, and that stock is Tesla. And we can see that over the last year, Tesla is down around 27%, while the rest of the market is down 7%. So they are underperforming the market over the 1 year chart here. And so we're going to see if this recent downturn in the market possibly presents a really good buying opportunity to buy into Tesla's stock at the current share price. And we're going to do that by looking at some of the really interesting news that's come out surrounding Tesla in recent time, as well as looking to the incredible growth in their company on their financial statements. And then I'm also going to use a discounted cash flow model to try to figure out the intrinsic value per share for Tesla to know if this is a good price to buy into the stock from a value investing perspective. And so right here we can see that this article points out that Tesla is currently dealing with some pretty fierce competition, and that's one of Elon Musk's current challenges is to stay ahead of the competition. And I've already gone ahead and gone through the article and highlighted a couple of key points that I want to cover here. First of all, they point out that in 2022 worldwide, Tesla was the #1 electric vehicle maker, but China's BYD and others are closing the gap very quickly. And we can see that in China, BYD actually passed Tesla in EV sales last year in the Asia Pacific region, while Volkswagen actually has been the electric vehicle leader in Europe since 2020. So definitely some fierce competition to gain market share in Asia and Europe for Tesla. We can see they point out that Tesla narrowed their competitive gap with Volkswagen's lead in Europe. But the U.S. automaker Tesla here also, they obviously surrendered ground in Asia Pacific to BYD, and as well as in their home market as the competition in the electric vehicle market heats up. Obviously, as Tesla gets bigger and bigger and the world continues to shift to the adoption of electric vehicles and autonomous vehicles, a lot of other companies are going to start jumping on that trend. And so we're going to see who's able to deliver the best product here. But we can also see in this article, or in this paragraph right here, they point out that over the next 2 years, rivals including General Motors, Ford, Mercedes, Hyundai, and Volkswagen will launch a bunch of new electric vehicles themselves, from low-end vehicles priced at $30,000 to luxury sedans and SUVs topping $100,000. In particular, right here, they point out that Mercedes in Silicon Valley basically pointed out that one of their newer models is going to create a very immersive experience for the car's owners through rich streams of entertainment and productivity content, mainly delivered through hyper screens that stretch across the entire dashboard, which make the rectangular screens in Teslas look quaint. And so we can see that in this case, Mercedes is trying to one-up Tesla in terms of delivering a really good at-home driving experience for their car owners. On top of that, executives pointed out that only Mercedes has currently an advanced level 3 partially automated driving system approved for use in Germany, with approval pending in California. And we can see that if we scroll down here, they point out that Tesla currently has a full self-driving beta automated driving system that federal regulators are classifying as a level 2 driver assistant system, which basically requires human motorists to be ready to take control at all times. On top of that, they point out that in July of 2016, when Elon Musk published his master plan for Tesla's future, Tesla ever since then has been pulling ahead of established automakers and EV startups in the most important areas of electric vehicle design, digital features, and manufacturing. At first, their vertical integration was not really panning out that well, but since then it's really started to pay off by allowing Tesla to achieve higher profit margins than some of their electric vehicle competitors, including competitors who are actually losing money investing in their electric vehicles. Also, they point out here that rivals are now starting to copy Tesla's production and manufacturing technology, buying some of the same equipment that Tesla uses in an effort to try to keep up with Tesla's growth and demand for electric vehicles. And then lastly, at the end here, they point out that Elon Musk told investors that Tesla can keep its lead ahead of other electric vehicle makers through their manufacturing costs. And he promised that on March 1st, he's going to show investors the most advanced production line they've ever seen in Austin, Texas. So really interesting stuff coming up here. Definitely interesting to see how the competition is heating up in the electric vehicle market. On top of that, there's this really interesting article here that pointed out that Tesla's Model 3 now costs less than the average new car. And they point out here that recent price cuts for Tesla's Model 3, as well as government incentives, have made it so that the company achieved a new milestone here. The Model 3 is now less than the average price of a new car, making it an affordable alternative for drivers looking to transition from gas-powered cars to electric-powered cars or to upgrade their vehicle. On top of that, they say that the Model 3 is now $4,930 less than the average price of a new car, and that the price is now around $42,999 US. And while Tesla is reducing the price tag of their cars, the cost of gasoline-fueled cars is actually going in the opposite direction here. We can see the average cost of a new vehicle has risen more than $10,000 since the beginning of the pandemic, reaching $47,920, definitely higher than Tesla's $42,000 cost. And that's mainly as a result of a shortage of computer chips, raw material inflation, and also a lot of decision making by car manufacturers to try to essentially keep inventories low and raise prices while investing heavily in developing electric vehicles. So a lot of these companies are really trying to maximize their profits as much as possible with their gas-powered vehicle sector in an effort to then use those profits to invest in their electric vehicle segments. Whereas Tesla obviously is just an electric vehicle company, and they're doing very well already, gaining ground and market share on a lot of these competitors that are trying to keep up. And so right here they point out that Tesla's price cuts sparked a ripple effect throughout the competitive landscape, with a lot of other car manufacturers like Ford, Mustang, and Lucid Group trying their best to also cut prices to keep up with Tesla's price war here in the EV market. And on top of that, they point out that the Model Y saw a substantial price cut of $13,000 earlier in the year, making it the third best-selling SUV in the United States. Lastly, they point out that the increasing affordability of Tesla's vehicles is helping to drive the adoption of electric cars worldwide, and also to continue to grow the EV market as a whole. And if Tesla is able to continue to offer price cuts, they're definitely going to attract a lot of new buyers as the company ramps up production at its new gigafactories in Austin, Texas, and Berlin, and also in Shanghai. So basically, there's never been a better time to buy a Tesla. So definitely a lot of interesting news coming out around Tesla, and we're going to see how this pans out over the future. And so right here we can see this is Tesla's balance sheet for the full year of 2022 compared to 2021. During that time period, total assets have increased pretty drastically here, from $62 billion to $82 billion worth of total assets. We can see that the majority of their business is financed by equity as opposed to liabilities. They have $36 billion in liabilities and $44 billion in shareholders' equity. Retained earnings line item has seen a very steep increase from $329 million to $12.8 billion. And also, this equity section is adjusted for the 3-for-1 stock split that happened in August 2022. So a lot of growth happening with Tesla's balance sheet here. Now we can see their income statement here comparing 2020, 2021, and 2022. The revenue and earnings growth here is very, very, very impressive. I've probably, in the last couple of videos here, really not seen any other companies that have ramped up revenue growth and earnings growth as much as Tesla has. And before I get into the actual dollar amounts here, I just want to point out a couple of things about their actual manufacturing capabilities. It's not really listed here, but in the fourth quarter, Tesla managed to produce 439,000 vehicles, and they delivered 405,000 vehicles. And in 2020, their vehicle deliveries grew 40%. So that just touches on a lot of the growth and manufacturing growth that's been happening as a result of Tesla's gigafactories here. But in terms of the dollar amounts, we can see total revenues increased year over year from $53.8 billion to $81.4 billion. So that's an increase of 51% year over year for their top line revenues. And then their net income increased even more, from $5.6 billion to $12.5 billion. So that's an increase in their bottom line net earnings of about 128% year over year. So not only is their revenue increasing, but their costs of revenues and other operating expenses is not increasing nearly as quickly as their revenues are increasing. And so their net income ends up increasing at an even faster rate, pretty much doubling their net income year over year here, while their revenues are increasing by more than 50%. So very impressive growth for Tesla year over year. Lastly, we can see their cash flow statement comparing 2020, 2021, and 2022. Operating cash flow has also seen a very steep increase from $11.4 billion to $14.7 billion from 2021 to 2022. And then we can see that in terms of financing activities, most companies that we've looked at on this channel, you go in here and you see that they're repurchasing a bunch of common stock and they're paying out a bunch of cash to shareholders in the way of dividends. Tesla is not doing either one of those things. They are clearly focusing mainly on reinvesting all of their capital back into the business to ramp up production, as opposed to giving that cash back to shareholders and investors of their common stock. So obviously there are different ways to grow a company, and this is just the way that Tesla has opted for. And so right here we can see this discounted cash flow model to figure out the intrinsic value per share for Tesla. And I want to preface this by saying that obviously these models are up for interpretation depending on the different growth rates and metrics that you input into them. It's going to put something else out. And historically speaking on this channel, whenever I make videos analyzing Tesla, they've never been trading below intrinsic value per share. And whenever I point out that fact, I always get a ton of hate and a ton of dislikes on those videos. So please don't hate or dislike on this video just because I'm reading off the facts of Tesla's metrics. I'm not going to try to present some sort of biased perspective here. I'm only looking at the numbers and just giving as much of an unbiased analysis as I possibly can here. And so Yahoo Finance is estimating that they're going to grow at around 18 to 19% over the next 5 years. And so I cut that in half for the next 5 years after that to 9% to be a little bit more conservative. They had around $7.5 billion worth of free cash flow for their most recent full year. They have net cash on their balance sheet of around $16 billion and around 3 billion shares outstanding, which puts their intrinsic value per share estimated to be around $60 per share, which means that at the moment they are not currently trading below intrinsic value per share. Since they're trading at $196 per share, they would have to get down to around $60 per share to be trading at intrinsic value based on these projected growth rates by Yahoo Finance. And so right here, I did a competitor analysis comparing them to some of the other car companies in the industry, particularly Ford and General Motors. We can see that across the board, Tesla is dominating their competition here. They have a better gross profit margin, better net profit margin, and better return on assets. Unfortunately, price to earnings ratio is a little high in comparison to their competitors. We actually aren't able to see Ford's PE ratio because in the most recent full year, they were not profitable. But in comparison to General Motors, we can see GM is trading at 6 times earnings, whereas Tesla is trading at 55 times earnings. And then they also don't pay a dividend, whereas Ford and GM do pay a very small dividend here of around 18 to 50 cents per share. So from a competitor analysis perspective, it looks like Tesla is beating out the competition in terms of profit margins, but their PE ratio is definitely higher than GM's here. And so to end off the video, I wanted to compare Tesla against some of the other companies we've looked at in prior videos. Unfortunately, Tesla did not make the share price to intrinsic value table simply because they were trading way higher than their estimated intrinsic value, pretty much more than 3 times their intrinsic value per share here. So that puts them even lower than Raytheon Technologies, which was trading at around 2.4 times their intrinsic value. General Electric and Albertsons are still the only 2 companies on this list to be trading below intrinsic value per share. We can also see that in terms of projected growth rate, Tesla comes in second place at 18.55% projected growth rate for the next 5 years, behind General Electric's projected 44.5%. In terms of profitability ratios, Tesla's gross profitability was around 25%, so they are behind Albertsons 26%. They didn't make the gross profitability list, but they did make the net profitability list, coming in around middling of the pack here at around 15%. Adobe still holds the number 1 spot on our list over the last few videos here at 89% gross profitability, and Microsoft at 36% profitability. Obviously, like I say in all these videos, keep in mind these companies are competing in different industries, so their profitability ratios are obviously going to be different. If we were to compare companies against each other in the same industry, then we'd be looking at this competitor analysis. This analysis is mainly just to compare the companies against each other that we've looked at in our recent videos. And lastly, we can see that in terms of stock performance, Tesla actually was able to kick Microsoft out of the #1 spot. Microsoft is finally not in the #1 spot for stock performance. We can see Tesla is very dominant here with a 733% return over the last 5 years. At one point, it was nearly a little over, it was getting close to 2,000% here. So a lot of growth for Tesla stock over the last 5 years. Microsoft comes in second at 191%, with Johnson & Johnson coming in last at 17%. So interesting to see how Tesla ranks up against the other companies. Clearly, in terms of returning value back to shareholders, they've done the best there. In terms of profitability ratios, we saw that they were the best in their industry, but in comparison to some of the other companies we've looked at in these videos, not doing as well as those companies, even though they're obviously competing in different industries. In terms of growth rate, they have the second highest projected growth rate out of the companies we've looked at, but they are not currently trading below intrinsic value per share here, doing better than the other companies in their industry. So interesting to see a lot of the recent news that's come out surrounding Tesla. It seems like it could potentially present a good buying opportunity just because of the massive amounts of growth that their business is undergoing. In terms of competing in the EV industry, they seem to have the strongest global footprint. Obviously, they're the #1 EV maker in the world. So it'll be interesting to see where Tesla goes from here. Let me know in the comment section down below what you guys think of this company and of this stock. Is it a good investment at the current share price? Let me know what you guys think in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.